Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, October the 21st, the year's 2024. Let's talk trading. Weekly open and gap. As always, these videos are for educational purposes only. Your results may differ from mine. And a friendly reminder. Risk management. Never lose more than you're willing to lose on any one single trade. So, taking a look at the week, on the pound at the moment, we are about 15, 16 pips below that weekly open, 33 off the high and 12 off the low. And a quick look at the dashboard shows all the weekly open gaps have filled. Notice we're in the lower wick zone of last week, and last week was almost a doji. Let's see, between the open and the close was only 7 pips. So that's almost a doji candle. A lot of wick there from last week. Zoom out to the month. We're still in the previous month's lower wick zone. And we are 344 pips below that monthly open, 368 off of the high and 48 off of the low. We're putting in the opening range for the week. Notice once again, we are below the opening range of the month and above the opening range of the year. In fact, we're almost in the middle, 216 below that monthly range and 262 above the yearly opening range. And speaking of the year, 310 pips above the yearly open, 412 off the high and 723 off the yearly low. The yearly low. Notice we had an inside bar 6 days ago. We actually got into it, and right now we're about 19 pips below that inside bar low. So once again, inside bar traders, if you took that breakout to the downside, you've been rewarded. And looking here, you can see there's lots of inside bar action. Taking a look at today's ranges, only 2 pairs over 100 pips or 100 pips or better. Pound 46 pips, that's very anemic. In fact, I had to check to see if today was a holiday because it's so anemic. We've crossed the weekly open just a couple of times so far today, and the last time was a break to the downside. That would have paid off nicely. Notice though, if you look left, we're right at this level here, this at a big range bar, and look, we're right back to that level. So the question is, will it push through it or will it turn around once again? It's kind of hard to say, but it's almost a flat top here and higher lows. What does that indicate? Usually prices going up. Rats. Range is too low for the rats. Once again, 45, 46 pips. Just not enough range. Bambino Flex indicator said to go long, but price is below the open at the moment. Pivot trading plan says price near the pivot, the bias is long. It's gone up a couple times. Price near S1, bias is long. You can see it's moved up from near that level a couple times too. once again, if you just have a real simple trading plan and you stick to it and you have your risk management in place, you should do okay. You don't need anything fancy. And I just see so many traders out there trying to do a bunch of fancy stuff. Full disclosure, what, 10, let's see, this is 2024. I'd say maybe 15 years ago or so, maybe even a little bit more. I was trying to do some fancy stuff too. And every now and then somebody would talk me into doing something fancy. Some of the crazy indicators that I've written, some of the displays. I guess it was kind of fun programming it, but after a while it's like, I'm just going to stick with my horizontal lines and my doing statistical analysis. That serves me pretty well. Like the missed pivots. I mean, fading the pivots can be very profitable. And let's see, today we took out that pivot. For the week, we've taken out the weekly pivot, and we've already taken out the monthly pivot. Oh, and one other thing here, looking at the H4 chart, I was talking with Walmall, and we're talking about gun to the head, and hopefully maybe this week we can get him back online. He likes trading that H4, this particular candle, this H4 open trade. He says he likes to see it go up one way and then come back down through it, or go down and come back up through it. Because if you look at the wicks, you can see price definitely crosses that H4 open. Wick zone, in and out of the upper wick zone, still at that 70% level. It's just price just doesn't like staying in the wick zones. And the thing is, you trade a wick zone or any other method, it's just a matter of being smart with your position size and smart with your stop loss work, because it's not going to work each and every time, and you just don't want to let things get too far out of hand. Because I see some traders, I don't know what it is, if it's greed, if it's stubbornness, but they just poo-poo those 2-pip profits. I'm not sure why they do it. I mean, if you think price is going one way, and you really shouldn't think, you should observe and label appropriately. Recognize what the market's doing as opposed to predicting or guessing what it's doing. And so, we took this trade here and it went down a pip or so. Let's see, how far down did it go? 47.3. So yeah, there was 2 pips to be had. But if you thought of something, oh, it's going to do this or do that, and then you might have experienced a little drawdown. There wasn't much, and then maybe more, but maybe you wanted even more than that, and then once again you're stuck back in that trade. And these are H1 candles, so you really want to be stuck in a trade for hours? Probably not, unless you're a swing trader. Then you might be in it for days or weeks or even months. I don't like to do that. And then again, it depends on, how heavy you're trading. If you're only trading a dime a pip, then yeah, it doesn't really matter most likely. Unless you have a very small account and where you live, you know, if you made $1 a day, that could feed a family. There's some places in the world where that's still possible. Not the US of A, of course, but that's besides the point. So you just have to be smart about the wins, and you know, these little wins add up. And you have to see what's going on. I mean, 46 pip range. I mean, how many pips do you expect to make out of a trade with the 46 pip range? What? You want 10 pips and that over 20%? It's like you have to be reasonable. Looking at the smart range, once again, 46 pips, 0 percentile, just not moving today. And we've got an inside bar, so we didn't even get near the high or the low. And the weekly crossover traders, though, high minus open 17 pips, open minus low 29. Once again, simple horizontal line. It doesn't move all week. You just have to trade it if you're interested. Once again, here we're looking at the 30-minute chart. Looks like we have an outside bar, came back to the inside the outside bar, and looks like it's going to pass through the midpoint. You can eyeball that. This is indicator 2, not the previous mid. But you can see that happened here. You know, it's really funny, but you know, these lowest highs and highest lows, I was putting together something on a chart, and I was looking at it, and it says, you know, even on a 1-minute chart, you know, if you look for this lowest high or highest low, price almost always has to reverse through it. It's one of those things, it's patience. If you have a plan, a system, it'll keep you out of trouble. I mean, right here, you can see this hit a high of 24, and the open on that was 23. So there was a pip, and then all of a sudden it reversed on you. But then it put in a new lower high. It went up, and you see it reversed on you. And if you notice on these lower highs and higher lows, how many times price returns to that level, it seems like. And here we've got the highest low. You see right here, price returned to that level, returned to that level, broke through that level, right there, broke through that level, returned back to it. And right here, as we're watching, price is breaking through that highest low. Once again, there's 2 pips to be had. I mean, these things just happen on a regular recurring basis. You know, we haven't pushed the range so far this month. So that's the year-to-date range by month. 416. There's a couple. We're definitely not the lowest. And on the trade for the week, inside the lower wick zone, sellers strong control, below the mid, below the pivot, lower high, higher low, inside bar. So fellow traders, that's the weekly open and gap report. I hope you had a fun and safe weekend, and I'm going to wish you a profitable trading week here. But remember, when you're trading, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.